Amy, just kick us off. How do you differentiate yourself from a company that most people know, WeWork?
Well, thanks for having me today. So WeWork is obviously a giant in the industry, but the Riveter sees itself as standing somewhere else. We are more like a modern-day union for working women. We have content, co-working, and community, and we provide a number of different price levels and access points for our members. So we cater to a demographic that needs truly flexible work. They might need a part-time membership or to drop in hour to hour. And then we also look at how we can advance our community in the workplace. We do that through innovative programming like office hours with venture capital investors, as well as exciting programming with celebrities coming in from Maria Shriver to Arlen Hamilton.
Amy, how do you take advantage of some of the negative recent press around WeWork, namely about their financials, overvalued, high liability, lack of profitability? How can you use that to your advantage?
So we don't try to use it to our advantage, but I do think it's really instructive to us to look at how other companies that are going public are showing us their financial growth. A venture-backed company's job is to take money and use it to fuel its growth, and so I don't fault WeWork for doing that at all. I think the interesting moment that WeWork has right now is to think about how they can change the direction as they go public and the statements that they can make. I mean, one thing to note, right, they don't have any women on their board right now, and I think it's an incredible opportunity for WeWork as they go public to make their board half women. They have so many incredible women leaders in the company, and so why not bring them into a more public position?
How do you differentiate yourself financially? You have rival companies that lease instead of own out their properties. How are you built basically from the bottom line?
Absolutely. So our model, we look at it as real estate light. So we are not going and engaging in massive build-outs. Because we're catering to a demographic that wants more flexible workspace, the Riveter is able to go into buildings as they are, kind of mold them into what our brand is without doing a large build-out. This allows us to take shorter leases with options to renew, and our build-out costs are much lower, and we aren't amortizing them over the life of the lease.
Are you profitable?
All of our spaces are cash flow positive, which is a big, it's a big moment for us.
Do you view competitors like WeWork as a zero-sum game? Or do you think that if they succeed and highlight the success of co-working environments, that everyone can succeed in that space?
I think that co-working is an industry that is just beginning. I think that as the future of work changes to be more flexible, that freelancers and people working in the remote economy and the gig economy will need spaces like this. I like to think of our spaces and how we can cater to really interesting segments in the economy, like working mothers who might have left full-time jobs but have gone on to do independent work on their own. And so we provide spaces for that demographic, which is really exciting. And I think that there is enormous opportunity for so many players in this space.
We talk about WeWork, of course, trying to file for their public offering and looking at going public in the coming weeks, coming months. Any plans for your company to go public?
Not today. We are just 26 months old, so we're very new. But down the line, I think anything could happen.